Jeremy, thanks very much for joining us here this morning.
Thank you, Tamzin.
Can you talk us through the key developments for Trinity in half one?
Half one may have seemed a quiet year for Trinity in terms of drilling, but we had production growth on the back of a drilling program in half two of 2018. So half one of 2019 saw production growth of 9%. Revenues increased by 7%. The oil price dropped a little bit in half one in comparison to half one of 2018, but profitability grew. Our adjusted EBITDA was up by 20% and on a per barrel basis by 11%. So the metrics are moving in the right direction. Our operating break-even, which is our gross sales, less the royalties, less our operating costs, and less our cash administrative costs, fell to 26.3. Again, that's very sustainable. The board typically tends to look at us staying sub 30. So in case of the oil price dropping, we have the ability to retreat and ensure that the business remains whole as best as we can. It's been a pretty strong journey for us in terms of the financial metrics that we've seen over the last, I would say, maybe 6 halves. So Trinity is going in the right direction. We've prepared for drilling and we commenced drilling in half two, which we'll get onto later on, I'm sure. But the business is very much getting more and more confident in its belief to be able to deliver strong financials. So we're focusing on how can we actually grow and use that as a platform to the next steps.
So you talk about strong revenues and profitability. What does that mean for the balance sheet?
As a reminder, where Trinity came from through our restructuring, we had some debt on balance sheet. We raised cash last year and we cleared the balance sheet of debt. During half one of 2019, with increased production and increased profitability, the cash conversion was in excess of 90% of our adjusted EBITDA, which is a good, healthy ratio to have. So we built that cash up to 17.8 million in comparison to 10.2 million at the year end. So the companies are creating cash and preparing for deployment of that cash so that we can look across the capital allocation hopper and make the right decisions for our investments to ensure we get the best returns for our investors.
And where's growth going to come from?
Growth is going to come through a number of ways. Trinity has a large reserves base and our 2P plus 2C reserves and resources are in excess of 43 million barrels. So within our own portfolio, we have a number of decisions to make there. We are focused on drilling on the onshore assets and we drilled 8 wells there last year. We have drilled and completed 2 wells to date so far, and that drilling program would have commenced in late July. Within that, we are on our 3rd well now, and we continue to look forward in terms of our drilling program. But very interestingly, we drilled a high angle well, which we've told the market about in half two of last year, and we spoke about it a bit during the course of this year. So the earlier part of this year, we took some time, we planned, we prepared, and we drilled that well, and it came in as planned. In fact, the drilling was a bit better than anticipated. We have now moved on to completing it, and the well is cleaning up as we speak. We are looking forward to the results from it because the logged section of it, the pay has come in as planned. The drilling was a bit better, so we're hoping for the production. And as we learn more, we'll appraise the market appropriately.
So you mentioned that you're going to be sustainably and significantly free cash flow generative. How are you going to achieve that?
I think the financial metrics have been pretty strong for some time now, and our focus has been how can we protect those and enhance them. Then looking at our costs is also important, but looking at costs through how we do things in terms of looking at processes. So right now we have a team that's focused on the underlying processes, and they're ensuring that what we're doing is fit for purpose, and it's also removing bottlenecks as far as possible. So we're looking for further ways to ensure that the financial metrics are underpinned by good processes, technology, and people who are very aware of how to utilize them. So we think that we are reassuring the business and taking it to another level so that when we start to grow, we have the ability to sit on very strong foundation, which is people, process, and technology.
So where does that sit alongside SPT?
Sure, thanks, Tamzin. SPT, or Supplemental Petroleum Tax, has been quite a challenge for the oil producers within Trinidad and Tobago. The regime has been looked at. It was put in place in the 1980s. It was there to get supernormal profits from the larger majors at that point in time. It's persisted through till now. And it's quite punitive or regressive even when the oil price that we receive is in excess of $50 a barrel. So it becomes very challenging to get the profitability and the cash flows that you'd have gotten at $49, for example. So we have been lobbying for change alongside the other operators. We've been leading the charge, going across a number of different channels. But without having clarity or line of sight of any change, we've also looked internally and we've said, how can we look at our business at 50.01, which is when the SPT kicks in, so $50.01. How can we plan for that? So we've looked at the business, we've modeled a number of different scenarios, and we see that the business is largely free cash flow accretive across a wide range of oil prices. But when it gets to that 50.01, it's quite difficult to do so. So looking within the business, we said, there are internal levers that we can pull. There are financial levers that we can pull in terms of the hedge, for example, that we'd have put into place earlier this year. We put 2 hedges in place. Those were largely there to mitigate against the impact of SPT. And then there are catalysts such as the high angle well, which changes your economics and your payback period. So that means cash is coming back a little bit quicker. And then outside of that, while we lobby for SPT reform, that's almost the icing on top of the cake that we're layering up.
So you mentioned your approach to operations. What is it that you're doing differently in the region?
Certainly on the onshore, we focus on digitizing and trying to get the information that we have. So we operate 200 plus wells across our portfolio. On the onshore, we operate around 180 wells. But the information that we get from those wells is very limited because we've been doing it manually. We're now focusing on trying to digitize that so we can get information on a more real-time basis so we can then optimize and understand what's happening with our production. So understanding what's happening with the reservoirs, the efficiency of pumps, and then our ability to react. We are trying to change that and in fact move from reactive to proactive as best as we can. You'd have seen probably very recently, we released an RNS that says we've partnered with Weatherford to pioneer the use of supervisory control and data acquisition, SCADA, on the onshore well. So it's the first time it's being used onshore, and we've applied it to 2 technologies for our artificial lift. That would be for progressive cavity pumps as well as for sucker rod pumps. So we are trying to learn this technology right now. It's given us the ability to continuously monitor the production. So it allows us to look at the production and determine how we'd like to produce it in terms of whether we optimize production or whether we keep production stable. But what it does, it gives us information, whereas before the information was very interspersed and intermittent. We now have continuous monitoring. In addition to that, we're also changing our drilling methodology. So we've looked across our portfolio, and whilst we are drilling traditional low angle wells, we see some opportunities where we can drill high angle wells. So as we learn more about this, we look to deploy this methodology more and more. So that production protection as well as enhancement is important for us.
And what does this mean for production volumes?
In terms of production volumes, we have guided to the market that we want to grow every year, year on year, by 10%. I'll caveat that the main proviso there is we need to ensure that we are free cash flow generative. And as the oil price changes, we'll always look and ensure that at no time we are jeopardizing the business or ability to generate cash. So we continue to focus on drilling and growing production by 10% year on year through our land drilling, but we've also got a pretty exciting development on the East Coast in the Galeota license.
So can you tell us a little bit more about your offshore operations?
Sure. On the Galeota license, specifically there on the East Coast of Trinidad, that license contains almost a full cycle for us, from exploration through to production. The TRIN field has been in production for nearly 50 years now, and the field, since we've taken it on, have actually grown production through better management of the production, increasing the amount of well portfolios by changing the technology that we use. Again, 2 years ago, we would have employed the crank rod pump and the mechanical pumping unit offshore on slanted wellheads, which was pioneering certainly from taking technology that was onshore and applying that offshore. So that was something that the team did there, and it allowed us to open up more wells in terms of the economic potential of the field. So we grew production by 20%. Simultaneously, while doing that, we've also changed the operating costs of the asset, and we've taken operating costs down by 40% in the last few years. So we've taken an asset that perhaps somebody would have been looking at and saying it's coming up to abandonment. We've actually pushed that out by changing the production and the operating costs and changed the economic life of the field. So whilst that has been happening in the background, we've got a juggernaut project, which is the TGAL development happening. And we've been looking at that in a number of different ways, from the surface facilities, how we drill, how do we power, and looking at platforms that are very specific and fit for purpose. For example, we are now looking at lightweight platforms which are conductor supported rather than the typical jackets that we have deployed already in the Trinity field. We're looking at powering from shore using a subsea cable And on the onshore facilities, we're looking at different ways to perhaps even go tankless in time. So the technology, the processes that we're applying there, again, are on the cutting edge. This is an oil field development. It is one of two in Trinidad and Tobago in the backdrop of declining oil production. So you have a national economy which is very energy-based. It's gas-focused, but oil is also important. And we see that we have an opportunity here to contribute very positively towards that. The Teagle development, the phase one of that is probably standalone 5,000 to 6,000 barrels. We see that as that comes on and we de-risk that we can actually probably do other phases of that. In addition to that, we see some exciting prospective areas that we'd like to drill. So we think the Galeota license, it's very encouraging, particularly when we speak with our partner, who is Heritage, the National Oil Company, and the Ministry of Energy. Both of their goals is to maximize recovery, and we think we're putting a very cogent plan in front of them to be able to do so.
So can you summarise where Trinity is at today and what you see the outlook for investors?
Well, people reading our results will see a strong set of financials, profitability, a strong balance sheet, cash flow generation. And I think it's quite an exciting time for Trinity in that this is now almost a kickoff point. And how do we ensure that our kickoff point, our base is solidified? It's through what I described in terms of people, process, technology, getting that right and firmer implanting where we are, having a transformational development on the East Coast there and working that and getting that closer and closer to a final investment decision. I think, the main drive for us right now is free cash flow generation and ensuring that we can demonstrate to our investors that regardless of SPT, we have the ability to return cash to this business that we can use to either grow the business through the drill bit, inorganically through mergers and acquisitions, or even through returning value to shareholders in due course via dividends or share buybacks.
Jeremy, thank you very much indeed.
Thank you.